I remember when I first started investing and coming across all the different funds and not knowing what all the different terms means and how to research, how to know what's what. So in this video, I'm going to go through all the tools, all the websites that I think a beginner investor needs to know how to use to make more informed investment decisions. This is the video that I wish I had when I first started investing so I could get my head around funds and which one to pick a lot sooner. Let's get right into it. So we're going to start off on an investment platform, Trading 212 in this case, because obviously the first step when researching funds is actually finding the funds that you want to research. So on Trading 212, they offer loads of ETFs. So we're going to quickly look at some ETFs here, go down to the most popular ETF section, and here you get loads of different results. So the thing we're looking for first is the ticker. So you see here, underneath each ETF, it has a string of 4 letters or numbers. That is the ticker. That's a unique identification for that fund. So you see VUSA, VUAG, you want to make a note of this. So make a note of the tickers of the funds you want to research, and then we'll go from there. And whilst we're on Trading 212, if you're looking to get started investing or want to start on Trading 212 in particular, you can get a free fractional share worth up to £100 by signing up through the link in my description. Alternatively, within 10 days of opening your account, you can use my promo code TOM in the menu page of the app. Go to the menu page, use promo code, type in Tom, and if you apply that code, you'll get a fractional share. If you do use it, let me know in the comments below what you get. Okay, so the first website we're going to go through here is justetf.com, which is one of my favorite websites for researching ETFs. So let's go. For this example, we're going to type in VUSA, and what we can do here is we can then get loads of different information about that ETF. So the good thing about Just ETF is it puts it all in one place. We can see this without having to trawl through different documents, different websites. It's all in one place on Just ETF. But for more specific things, there are other websites which we'll go through next. So on Just ETF, the first thing you have is an overview tab. So on the overview tab, you have a brief description. You can also access the fund documents, which we'll go through later in the video. And there's more stuff here, but basically you want to go through at the top, you can scroll through the different options. So we're going to start off on the basics. So on the basics, you get the basic details. You have the index the ETF tracks. So with this one, it's a simple S&P 500 ETF, but this is more useful for more niche ETFs that have less popular indexes. You'll have ones with ESG filters, sector neutral filters, all sorts of different stuff that you want to make sure you actually understand the index the ETF tracks. And what I would do for the less popular ETFs is when you get the index, then Google that index and make sure you research the actual index. What does that index do? So what is this ETF actually aiming to replicate? You have the investment focus. This is basically just the category of the ETF. Fund size. So this is the total assets under management within the fund, the total size of the fund. All the shares together, that is the fund size. What you got to remember with this is this on Just ETF isn't the most accurate up-to-date figure. It's quite accurate, but it's not updated daily or monthly, I don't even think so. For the most accurate fund size, I always check the fund provider website because they usually date the fund size daily, if not weekly. Next up, total expense ratio. This is an estimate of the annual fee of investing in this ETF. So S&P 500 ETFs are usually quite cheap, but again, if you're looking at less popular, more niche ETFs, then this total expense ratio may be a bit higher. But what you've got to understand about total expense ratio is that you don't even know you're paying this fee. The total expense ratio is basically deducted from the assets of the fund on a daily basis, pro rata. So the share price gain that you see or loss is with that fee already taken. You don't have to worry about paying that yourself. Replication method. This is how the ETF aims to replicate the index. So there's a few different types you've got to be aware of here. Physical full replication means that the ETF, the fund, actually buys all the underlying stocks in the index and replicates the index by owning all those underlying stocks. There's also physical sampling. As it suggests, it's not full replication, it's a sample of the stock. So indexes that have thousands of stocks within them, fund providers may choose to just buy a sample of the index. So for example, there might be an index with 4,000 stocks, but a fund provider may work out that they can actually track that index pretty perfectly with only buying 2,000 of those stocks. So that's a sample. And then the third way is synthetic swap-based. So swap-based ETFs, these are ETFs that enter into a swap agreement with a counterparty, so they don't actually own the underlying stocks of the index. Instead, what they do is they hold a collateral portfolio and they pay a swap fee to a counterparty that promises to pay the returns of the index. So for example, it might be JP Morgan or Goldman Sachs is the counterparty. That institution pays the total return of the index in exchange for the return of a collateral portfolio and a swap fee. There's pros and cons of that method, but this is not a video going into detail about that. Next up, we have other things to keep in mind here. The listing date, so that's how old the ETF is. I find this important to know because if it's a brand new ETF, there's obviously going to be no past performance to go off. You've got distribution policy, so this is how it handles dividends. Distributing means the ETF pays out the dividends in cash, they land in your investment account. Accumulation means the dividends from the stocks within the fund are kept by the fund and then they're reinvested into the fund automatically. The investor in the fund never sees those dividends. And then distribution frequency is how often dividends are paid out. So this is usually quarterly, 4 times per year, semi-annually, twice per year, or annually, once per year. They're the few most common distribution frequencies. Then fund domicile, Ireland. So this is where the ETF is based from a legal, regulatory perspective, where it's actually domiciled. And this is important because Ireland has a favourable withholding tax treaty with the US. So this is paid at fund level. The fund will only pay a 15% withholding tax on dividends received from US stocks. Whereas on the other hand, if a fund is domiciled in Luxembourg, then Luxembourg pays 30% withholding tax on US stock dividends. So in general, if investing in a fund that holds US stocks, Ireland is favourable over Luxembourg for the domicile. And most ETFs tend to be domiciled in Ireland for this exact reason. Okay, so now we're going to go on to the holdings tab. And again, this isn't the most up-to-date data, but it is pretty good and you get a good idea of what the holdings of the ETF are. And when I say it's not the up-to-date, if we scroll down, we can see here, as of 26th of December 2024. So it's a month and a half out of date basically, but it does give you a good idea of what's actually in the fund. If you want the most up to date, the fund provider website is the best. So the holdings, this is an S&P 500 ETF, nothing surprising here. Country breakdown and sector breakdown. A couple other things to see on here. You have performance stats, dividend stats, risk stats, stock exchange. This is useful if you find an ETF that trades in euros or dollars and you want to find the pound listed version. So for example, we're looking at VUSA on the London Stock Exchange, trades in Great British Pounds, but this ETF also trades on a lot of other stock exchanges. That's why on Trading 212, you'll see so many different Vanguard S&P 500s. There's ones that trade in euros, dollars. That's because they want to make it available for as many different countries as possible, many different currencies. As a UK investor, you probably want to buy the GBP one to avoid foreign exchange fees. But this is a really good way of finding ETFs listed in different currencies if you want to see if it's available in your currency. Then the last thing about Just ETF, perhaps my favorite feature, is the chart. And this is where you can compare ETFs against each other. So you can see here we have the 5-year chart for the USA. If you do maximum, it goes back to when the ETF was listed. And let's say we want to compare it to the FTSE 100. So we'll do the iShares FTSE 100. And there we are. We can see obviously the S&P 500 has massively outperformed the FTSE 100. This is obviously more useful if you're comparing more similar ETFs. But the other thing to keep in mind is if you scroll down, you can include dividends, which is really great. It means you can see the total return of the ETF. For example, if you just look at the return on Google Finance doesn't show the return including dividends. It's just the share price gain or loss. So to see the total return of a distributing ETF, you really want to make sure including dividends is ticked. That will give you an accurate comparison. And this allows you to compare distributing ETFs to accumulation ETFs. So that's Just ETF. There's loads to do on here. You can spend a whole day on here looking at all the different things. But let's move on to the next website. Okay, next up we have the London Stock Exchange website. So what's really great about this website is you can see the bid offer spread of an ETF. Or anything really, anything listed on the London Stock Exchange. So let's do it again. We're going to type in VUSA to get the ETF we want. And here, when we scroll down, we can see a bid and an offer price. So the bid and offer price is the price you can buy and the price you can sell the ETF at. So if you've ever wondered why you're immediately down after buying an ETF, it's because of bid offer spread, the difference between the price you can buy it at and the price you can sell it at. This is not a fee charged by your platform. This is just part and parcel of buying anything listed on a stock exchange. So as you can see here, Vanguard S&P 500 is a very popular ETF. It contains highly liquid underlying stocks. It's got a massive fund size. So the bid offer spread is almost non-existent, 1p. So in this case, you're not really even going to notice the bid offer spread. But less popular ETFs, they're going to have significant bid offer spreads. For example, an ETF that contains emerging markets, small cap stocks might have like a 0.8% bid offer spread. And then you might be wondering why after buying it, you're immediately down by 0.8%. That is why. Another great thing about the London Stock Exchange website is this chart here. So it's kind of similar to the Just ETF chart in that what you can do is, I like to switch it to percentage so we can see over the past year how much it's up by over the last year. You can tick total return, but where this is superior to Just ETF is that I can compare it to not just ETFs, I can compare it to investment trusts, individual stocks. So say, for example, I want to compare this to JGGI, which is an investment trust. So JP Morgan Global Growth and Income. So we can see over the past year, the S&P 500 has outperformed JGGI on a total return basis. If we increase that to 5 years, we can see it's almost neck and neck. So I like to see this because it's quite interesting to me that a global investment trust has kept up with a US stock only Vanguard S&P 500. Other things you can see on here, if you scroll down, you get a lot more details about the ETF, so kind of similar to just ETF. You get the expense ratio, the country of share register, so that's the domicile, active versus passive, ETF holdings. So a lot of these websites will give you a lot of similar details, and you just got to keep on track of here where it says when it's been updated. So this one is as of 31st of December 2024. So just keep in mind, whichever website you're looking at, have a look at when it was last updated, the holdings. And then the last thing that's interesting to see on this website is recent trades. So you can see all the recent trades that have gone through for the Vanguard S&P 500. And as you can see, this is a ridiculously popular ETF. So it's like every minute, there's so many trades going through, whereas other ETFs and shares, it might only be a few times an hour. Okay, and the next website we're going to look at is Hargreaves Lansdown. So this is another investment platform, but I don't actually use Hargreaves Lansdown to invest at the moment. But what I do use it for is for researching, because it does have some quite useful tools and data available. So again, if we search for the Vanguard S&P 500, we'll be able to find that here. Just need to accept the cookies. There we are, Vanguard S&P 500. So I've got the app installed, so it's taken me to the app, but the website is very similar. And what we can see here is we get more details about the ETF, but importantly, Hargreaves Lansdown gives us a percentage for the spread, the bid offer spread that I showed you on the London Stock Exchange. You don't need to work it out yourself. Hargreaves Lansdown gives you an estimate of the indicative spread at the current time. So you can see 0.02%. As I said, in the case of the Vanguard S&P 500, you're not even going to notice that spread. For comparison, let's have a look at an emerging markets ETF, which is less popular, Wisdom Tree Emerging Markets. We scroll down, we can see the indicative spread for this one is 0.93%. That is very significant. So if you bought some shares in this ETF and you're immediately down by 0.9%, now you know why. It's because this one has a wider bid offer spread, it's less popular, there's less transactions going through, underlying stocks of the ETF are less liquid. So all those things together means that this ETF has a wider bid offer spread, and it's good to know this when buying less popular ETFs. It doesn't mean it's a bad ETF to purchase or a good one. It just means that you need to be aware of that when you're putting a transaction through, so you understand why you're immediately down. It's not your broker taking a hidden fee, it's just part and parcel of buying anything listed on a stock exchange. So the next thing I want to show you is how to actually read the fact sheet and key investor information document for ETFs. So I'm back on Just ETF here, and you can see the documents, fact sheet, key investor information. So you can find this on Just ETF or on the fund provider website. You'll definitely find it on there. But let's go and have a look, first of all, at the fact sheet. So unlike the key investor information document, the fact sheet, there isn't a set layout that fund providers have to follow. So fact sheets from Vanguard, iShares, Wisdom Tree, etc., they'll all look different. Whereas the key investor information document, because that's a regulatory requirement, they're all a standard layout and they all look very similar. So with fact sheets, you kind of have to do your own looking around because they'll all be in different places. So how Vanguard have laid out theirs is we've got the listings at the top, so the different stock exchanges. Another thing to keep in mind is the base currency. People get this confused. Base currency should not be confused with the listing currency, the trading currency. So the base currency is just the underlying base currency of the fund. It's not the currency that you're purchasing your shares of the ETF in. As it says up here, GBP and USD on the London Stock Exchange, Swiss francs, euros. So to always remember, don't get confused by base currency USD on the key investor information document or the fact sheet. That is not the currency you're going to be using to purchase. We can see here we also have the ongoing charge figure on the fact sheet here. If we scroll down, we also have past performance of the ETF and how well it tracks the index. So when you see benchmark, that's the index. So you've got the fund, net of expenses, and the benchmark. The difference between those two is called the tracking error. Now with an ETF that contains highly liquid stocks, like the Vanguard S&P 500 with a low total expense ratio, you would expect almost no tracking error. And that is the case here. You can see over the past 5 years, the fund has actually outperformed the index, which is interesting to see. More past performance data here. You then have holdings like data, the number of stocks, the characteristics, top 10 holdings. And again, you want to see when it was last updated. So this is 31st of December. You got exposure to different sectors. So you can see all those things in one place on the fact sheet. Now let's head over to the key investor information document. So here we are on the key investor information document. This has a standard layout. So no matter what provider you're using for your fund, Vanguard, iShares, Wisdom Tree, Xtrackers, these will all look very, very similar because there is a standard layout they have to follow. So what you have at the top is a description, what the fund does, how it attempts to track the index. You have a risk and reward profile. So because this is 100% equities, US stocks, this has a risk of 6 out of 7. On the other hand, like a bond fund will be on the other end, like 2 or a 3, and then a money market fund will be a 1. So what you got to understand with the risk and reward profile, this is regulatory requirement. And whilst I'm not a financial advisor, how I would interpret the risk and reward profile is that a 5, 6, or 7 basically means it's not suitable at all for short-term goals. That does not mean that it's ridiculously risky over the long term, in my opinion. So this fund with a risk of 6 or 7, if you're holding for 5, 10 years plus, then it isn't really as risky as this sort of indicates. Whereas definitely if you're only holding for a year, couple of years, it is very risky, because with a 100% equity fund, you could buy it and then there could be a stock market crash minus 20, 30, 40%. Then on the second page, you have more information about charges. So we see again that total expense ratio, and we can also see past performance. You can see that this one is a lot more wordy. It's not as well laid out. And that is again, because it's a regulatory requirement. They're just listing all the things that they're legally required to do. The fact sheet is more user-friendly, easier to do your research and see what's actually in the fund. So I hope that video was helpful. There's a lot more websites I could have gone through, but I don't want the video to end up being too long. And I could do a part 2 of this showing you more websites. And what I want to do with my channel going forward is I want to do more than one video per week, but because making a heavily edited video is more time consuming, I want to do one polished video per week, heavily edited, but then another video like this where I'm just talking to you with the camera and just giving you some value, basically sharing things that I wish I knew. And because these videos take less time to edit, it means I can get them out to you, get that value out, and I really hope it is helpful. And if you do find this sort of content helpful, please leave a like, subscribe, and let me know your thoughts in the comments below. Thank you for watching.